Good morning, everyone, and welcome to another edition of Bleeding Crypto's 15-minute BTC update, market update. Today is Monday, July 1st, 6:31 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving my disclaimer. I am not a financial advisor, and this is not financial advice. I am wrong 99.9% of the time. So if you use real money and you follow me, you have a 99.9% chance of losing it all. This is just for entertainment purposes only. All right, guys, I had to protect myself legally. So let's go ahead and get started. I just finished an in-depth market update with my morning, I call it a morning brief video with my team. It was live with my community, and it went for almost 50 minutes just on Bitcoin. So obviously this is not going to be, I can't do that in 15 minutes. So I'm going to give you just the broad strokes. I cover both macro and day trading and the macro view as well. But this channel is really more for day traders. This is the day to day. What do we expect for today? That's kind of what this channel is. So I'm going to try to do it as brief as possible, keeping in mind what I already know and what I've seen this morning on the macro sense of it. Now, I want to cover this here before I do anything else, because this is what I posted. Now, as a trader, guys, we don't have a bias. As a day trader, we cannot have a bias. Our only bias is profit. Do we make profit to the upside, or do we make profit to the downside? So to us, it doesn't matter whether you're a bull or a bear. Now, I make my moves depending on the data that the market gives us, and there's always invalidation and validation. And we'll go kind of back to what we talked about before. You've seen this before, but this is going to help you continue that muscle memory. We always use this as a last case scenario, but typically what we want to do is what? We want to see the continuation rule hold. We want to see if we can come down into here and then have a push to the upside. If not, then obviously we're going to go a little bit deeper. In this case here, we didn't go down to the reload zone. We actually barely made it to the continuation fib, but we did something that's really important. I'm going to go and take this off here, is that when we pushed up above the resistance, we reclaimed it and we held. This is something you need to note. This is something you need to pay attention to. Not only did we hold it, but as we started to move up, then this came into play. Do you guys recall what this was? This was a lower high, because we are in a downtrend, and this measures those types of downtrends. Doesn't mean that the market has to go down. It just means that this is the area when we hit this fib sequence, we typically reject and we don't go higher. But we can, and that would invalidate it. Then we look to the left and we look to the prior lower high and look to invalidate that. And if we continue to do that, what does that do? That shifts the trend from going to making money to the downside to making money to the upside. Again, doesn't matter if you're a bear or bull, you need to know which direction you're going to be able to play the market. And when we rejected here, look at what we did. We consolidated, and we came back and we back tested this again. Now, for those who are in my, I don't know if any of you guys are in my Discord, you guys know that this is the bottom of the channel. Here's the bottom of a big channel that we've been following for quite a while. And we are now, we bounce once again off the bottom of that channel, which is very notable. We did it here, 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 and here. So the market, the bulls are stepping in the same area, trying to save the market. Doesn't mean they're going to succeed. It doesn't mean they're going to fail. All it means is that we, as analysts, have to identify if they're truly here, or is this just another short squeeze, another attempt to trap longs and then bring it down. Take out all the shorts and then trap the longs and then reverse it and finally drop down below. There are objectives down below that could be met, and if they do, we're going to break the bottom of that channel. And if those objectives don't hold support, we're going to go lower. Right now, the target, for today, let me at least talk to you about two different scenarios that I'm looking for. So I'm going to go ahead and erase this. I just wanted to explain what this was here. Now, this here was this move, if you look at the 4-hour time frame, was this move. We put a low, We put a high, and look where we bounced. Exactly at 618 at the Fibonacci line. And look at the bounce. We bounce, we put in a lower high, but we had a high, a low, we had a lower high. We never broke above here. We had a lower high. We put in a lower low, but here we reversed it. We put a higher low, and look at this higher high. Besides looking at candles, guys, you also have to look at the environment. All right, so that comes into play as well. News events, like rebrandings or like mainnets for alts and things like that nature. All that affects the market. Well, we have something that affects Bitcoin equally, and it's going to be the weekend. We call them scam pump weekend. SPW, scam pump weekend is what we call it. Why? Because we see this pattern play out pretty often, where we'll run on a weekend, like on a Sunday, which is what we did. We're on a Sunday, and then when New York comes online, they smack it down. It's typical. Do they always smack it down? No, not always, but a majority of the time. And again, we're analysts. What do? We analyze the numbers, and we say, okay, this is a pattern. And then in this pattern, this is what usually happens. That's what an analyst does. So many times people forget that as an analyst, you're doing one job. As a trader, you're doing another one. They're not both the same. They're two different roles that you're trying to learn. But often people mix both of them together and they don't know how to separate them, and that's why they can't be successful. As an analyst, I'm looking for that pattern. This pattern is not a pattern that I'm going to get excited over, because the majority of the time, the odds are that New York will give it back. That's a couple of things that I look for, though, before that happens. What are some of those signs? A trap for longs, because if the odds are that we're going to roll over, a lot of the times, again, not always, New York will go in and put a trap move. They basically will go up to get people to say, oh, here we go again. People jump in longs and they roll over and they take them out. That's the job of a market maker. Take a look at the delta here on high block. Look at these dates. June 27, 28, 29, 30, July 1st. What did they do? Monday, they had all these shorts. Then they liquidate all those shorts. People go long, then they liquidate all those longs, then people go short, then they liquidate all those shorts, then people go long. You see the pattern? Again, as an analyst, do you not see that pattern? So based on that behavior, what's the probability I'm looking at? Well, when we go down, we typically put some sort of market structure. What is the most common market structures that I recognize? Would be a double top. We call them an M top or double top. So that would mean that I would want to see something like this. I'm going to be looking for something either right here, like this, that equals to this high here, or, excuse me, this is a wrong, here, let me show you, let me do it again. This is the line right here. So I like something here, like this, or what I did on the first drawing, where we actually go a little bit higher above here, sweeping these highs here before dropping down. That is a very common. It doesn't mean we can't fall from here and drop. Yeah, we can easily do that, but that's not the normal behavior. The normal behavior is we put two peaks, double top, and then a drop. And all you really have to do, guys, is just look left, and you can recognize a lot of that. Look, before a drop, what do we do? 1, 2, drop. This one was a triple top, actually, which in reverse is an extremely bullish market structure. Let me show you this, because you guys are going to be hearing this a lot. I'm going to be doing these every day. I really enjoy doing these for you guys. So this is a pattern you guys are going to recognize from me. So let me do this. I'm going to invert the scale. And when we see 3 lower highs, we're going to run. The chances are we're going to run. Well, this did that. That's exactly what this did, but in reverse. Boom. And we dropped. Look at here. We put an M top, like a double top, and we dropped. Let's go to the 4-hour time frame. Here it is again. We put a double top and we drop. Now, on this double top, I was expecting, because normally on a double top like this, we normally go down to the 786. But look, not always, but we did hit the reload zone. Nothing is going to be exact, guys. You have to give yourself some wiggle room. All right, nothing's going to play out exactly to a line you want, and if you can't get that out of your head, you're going to have a hard time succeeding and be able to catch those moves. So everything has within reason and within a margin. But yet we still went into this box. We still respected this box, and not exactly where we bounced from. So those are the type of things that you need to recognize and know that, okay, it may not come down to here, but as long as it respects here, I'm good. That's exactly what it did. Now, this is setting up to a possible double top again for another move to the downside. Because, again, I don't have time right now, but there are a lot of objectives to the downside that I believe are going to get met. Now, what's going to change my mind? What's going to say, nope, the market's saying we're going to go higher. That's fine. The market wants to do that. Then you know the position that you need to be in to maximize that. There's a couple of things that I'd want to look for. First, I'd want to push my EMAs. So let me get my EMAs, because the EMAs do matter on how I view the market. The daily time frame to me is very important. There's two EMAs that I'm looking for on the daily time frame: the 100 EMA and the 50 EMA. Yesterday, look, that's where we're rejected off the 21 and 100 EMA. We didn't cross the 100 EMA. So in order for me to start getting bullish, is going to be, I need a flip, better said, flip the 100 EMA into support. That's the start. That's a really good start. But for me to completely turn my bias that we're going back up and we're not going to visit lower targets for now, doesn't mean it can't happen, but for now, it's going to be flipping the 50 EMA. Flipping it, holding it, and start trading above it. Because just flipping it once doesn't mean anything. It can just be a deviation. And then we roll over. So I want to see a proper flip, consolidate, and then that move. That is then going to shift my probabilities that we're going to revisit the $70,000 range, between $70,000 and $73,000, $74,000. I'm not thinking all-time high. I'm not thinking $100,000. No, I'm just get one thing at a time. What do we get from here? What's the next one? What's the next EMA from there? Take it one level. What's the next resistance point from there? Take it one step at a time, because we are inside of a range. Here's that range. We're still in this range from the very beginning. This range has not changed. Let me show you here. Right there. That's the bottom of that range. That's the bottom of that range. So actually, give me 1 second. Yep, right there. Right there. You see how we deviated, but yet look, this weekend we held this. We kept on going back and forth. We held this. And we're bouncing off that again. There are some things to the downside that I believe have a good chance, but there's not a guarantee. But once we flip this, now we start talking about the medium line. Look at the medium line. Look at the support on this medium line. You think that, look at the resistance. Look at the resistance. Look at the support. Look at the resistance. Look at the resistance and support. You think they're going to cut through this like butter? Doubtful. But now we start talking about, we're back into the middle of this channel. You flip this, we start talking about the top of this channel. Are there other resistance points? Absolutely, there are other resistance points. So if you take an extended line and you hit this line here and you just make this line just to right there, tells a story. Just these two peaks. These two peaks created this new diagonal resistance line. If you follow it through, we had a break, a deviation, but we fell right below it. Then, give me 1 second. My daughter is... Then we came up to it again and we rejected. Then we came up to it again and we rejected. Then we flipped it into support. Remember what I said about the 100 EMA? I don't want to see just a break. I want to see a consolidation. Well, look, this tried to do a consolidation, and what happened? It failed. Back tested. We came down. We back tested again, and then look at the result of that. Do you see that? That's why. I'm sorry, guys. I have my daughter, my grandkids spend the night, and my daughter's coming to pick them up. She's texting me. I apologize. We're already into 15 minutes. So I just want to give you a little bit of a backstory. It wasn't what I was going to do, but again, I'm just in the habit of, I've got to make myself clear so that people can understand what's going on. So for today, this is what we're looking for. This is what I'm looking for today. I'm going to make it real easy by doing this. It'll be easier if I do this real quick. Give me 1 second. And you'll understand 100 EMA daily. And I'm going to put this here. And I'm going to do the same thing for here. Um, 50 EMA daily. Perfect. So now when we go to the hourly time frame, we know where those are located, and then we can. This is my plan for today. My plan for today is I want to see if we're going to reject here by either sweeping these highs and then going down, or just going up to a straight double top here and then coming down. In validation of that, get above here, hold it, then come up to here, get above this, hold it, and we're singing a different tune. Today, I'm thinking down, but a move up first, then down, unless we get invalidated. It's that simple. One day at a time, one step at a time. I don't have a crystal ball. The market is going to show me what it wants to do. I don't show it. I don't tell the market you have to do this. I just look at prior history, look at the probabilities, wait for them to play out. If they don't play out, then I follow what the market tells me. I'm the market servant, not its master. Okay? Hope you guys have a good day. Tomorrow we'll have another video, and we'll go from there.